So you are fresh off of your first investor meeting, your first annual meeting with your investors in your new role. Take us inside. What did you tell them? What was the main message to your customers as they gathered in Washington?
Well, sure. I think it's kind of like a couple different thoughts happening. First, investors are really pleased with returns. The industry's been doing great. I think it's fair to say the U.S. economy is doing great, so people feel good about that. But I think the issues of the day are how long can this continue? How long can the global economy keep going? Because we are starting to see some interesting signs. But really, in the deal environment, how is all the money going to be deployed that investors, that folks like us have raised, and what are going to happen to returns moving forward?
Right, and let's put some numbers around that. Roughly $1 trillion, give or take, in so-called dry powder.
Roughly speaking, it's a lot of money.
So how do you put that? How worried are you, given what you oversee,
right,
a couple $100 billion across all asset classes, about getting that money out and delivering the returns that you have historically?
Sure. I mean, look, that's our major focus. We're an investment firm. There's nothing more important to us than figuring out how to deploy it, manage these investments well, and deliver great returns. So that's what we go to sleep thinking about and what we think about waking up. When you take a step back, the role of private capital, though, in the global economy not only is expanding, but has to continue, and I believe will continue to expand. I mean, just think about private equity. Folks may not appreciate this, but the number of public companies that are around are about half of what they used to be from 20 years ago. The Wilshire 5000 only has 3,500 component companies in it. We're seeing companies now, they don't want to go public. There's so much more advantage to working with private equity in terms of long-term growth, value creation, what we can do to help these companies really drive value, that we're just seeing a tremendous shift in terms of the desire to partner with private equity, but really private capital. Mm-hmm. You're seeing growth in different asset classes, infrastructure now, certainly private credit, which is growing at twice the rate of private equity. So I think there's an underlying theme that's at play here in the world, which is the role of public capital versus private capital. Mm-hmm. And you're going to continue to see the emergence of private capital at the expense of public capital. Now, I'm not saying there isn't a role for public capital. There certainly is. But surely what we can do with the money and all the value add that we bring to our companies is certainly going to drive more investment opportunities in the future.
I want to get back to private credit
Sure.
in a second, but before we get there, you've described a very attractive landscape that's drawing a lot of competitors
Yes.
into that $1 trillion of dry powder. What's the net effect on that of prices for deals, valuations overall, especially
Right.
given the economic backdrop?
Right. The net effect is it's going to get harder. Returns have been great in the past, and no doubt returns can be great in the future, but it's just going to be harder to keep driving the rates of returns that the industry has shown on average. If you take a step back, there are three ways we drive value to equity. You can financially leverage.
Right.
You can buy low, sell high, meaning buy at one multiple, sell at a different multiple, or you can grow the company. Leverage is at about the highest you're going to be seeing for a while. Rates may start to go up. So I'm not so sure there's more upside in financial engineering. Multiple expansion, it's kind of hard to make a case right now, given how high valuations are, that multiples will keep expanding. And in terms of growth, I do think there's real ways to grow companies. And to us, that's where we're most focused on. Carlyle drives 60 to 70% of all of the returns we drive for our investors by fundamentally growing earnings at our portfolio companies.
All right, so those first two things that you said, those are a little easier to do. The third is a bit harder. Does
Right.
it cost more? Does that ultimately weigh on returns a little bit? What's the net effect there?
It's harder to do. You need to do it over the longer term, and you have to find great CEOs and great management partners, and then bring to the company a platform of resources, whether it's leverage purchasing or IT or human capital management, a whole bunch of things that Carlyle can do, working in conjunction with the CEOs to really drive growth and earnings improvement at these companies. And I actually think in the future, the role of private equity, we're turning into more of an industrialist as opposed to the financial investor. It used to be you were looking for folks who could go find a great deal or figure out a way to raise cheaper debt. Now, the folks who do well in private equity are folks who can say, that's the right CEO who can execute this business plan at that company in this sector with all that's going on. It's much more of a business judgment, industrial judgment type of a perspective that I think is really going to be critical to successful investors moving forward.
And what about the appetite? Carve-outs is a
Sure.
place where you guys have played really since the beginning of the firm several decades ago, taking an unloved or underloved asset, orphan company or a division. How hardy is the appetite on your side, and how hard is the appetite on CEOs to sort of unload things at this point?
Very high. We've made a great business around doing carve-outs. AkzoNobel recently announced, Atotech, Axalta, a very successful deal of ours. And I think you're going to see that trend continue. And in fact, one of the reasons why I think you're going to see deployment opportunities continue, at least in our business, is the scale and complexity of these carve-outs is just increasing. We as a firm are incredibly well positioned to go after that, but as the world continues to grow and corporations start to focus on their major businesses and start to dispose of assets that they think they can do less with, there is a real role for private capital to step in and say we can do more with it in conjunction with a new management partner.
So let's talk about those CEOs, because the other sort of intimate look that a guy like you gets is how CEOs, how boardrooms are feeling about their own businesses, what they're hearing from their customers. Take us inside those conversations, both with the companies that you own and the companies maybe you want to own. What are they most worried about?
I think everyone appreciates how strong the U.S. economy is right now. U.S. economy, in fact, has accelerated a little bit from last year. But I think we are very cautious about the fact that outside of the United States, growth has slowed. Europe is slowing down a bit. China definitely has slowed down a bit, Japan. And we're also seeing monetary policy and conditions diverge. The U.S. is trying to raise rates. The rest of the world is either trying to wait and see, or in China's case, lower rates. And so there's a ton of uncertainty that is being injected in the environment right now. And I think with respect to the U.S. CEO, they're trying to think through input prices are starting to go up. Can I pass those costs through to the consumer? If they can keep their margins high and their profits going. If they can't, you're going to see a squeeze in corporate profitability.
How worried are they about trade war?
Look, I think it's fair to say everyone's worried about the trade war, and everyone should be worried about trade tensions. We have not yet seen the mathematical effect of the impact of all of this noise on our portfolio companies. But I'm more worried about the second, third order effect of what does this do to confidence, what does this do to investment spending, what does this do to supply chain plans in terms of where you position your factories and your points of distribution. And I think there's a level of uncertainty that's been injected. And, we're strong believers in fair trade and free trade, and hopefully the authorities can figure something out.